Hello, Adam Gower here, and I build digital marketing systems for real estate professionals so you can find more investors, raise more money, and do more and bigger deals. Scale up at gowercrowd.com. Welcome to the Gower Crowd podcast syndication in the digital age with today's guest, Michael Flight at Libertyfund.io. Now, Michael is the founding principal of Concordia Realty Corporation, Concordia Equity Partners, and more recently, Liberty Real Estate Fund, that is a net lease property fund curated to create a conservative, safe haven portfolio of long-term single-tenant net lease properties designed for geographical diversification, tenant credit diversification, and industry diversification. I quote that from his LinkedIn profile. I know Michael better as one of the country's leading pioneers in the world of tokenization. He is really an extraordinary thought leader working on some very, very exciting projects. Definitely check out his website, libertyfund.io, if you want to get ahead of the curve in real estate investing and in syndication. And if you want to raise more money and do bigger and more deals, then we can help you with that. Here at Gower Crowd, go to gowercrowd.com, use the contact page to reach me directly, and subscribe to my newsletters. We have one on Wednesday that covers the latest week's updates in the commercial real estate crowdfunding and syndication world. And on the weekends, we put one out that is strictly educational. Newsletters are completely free, so go ahead, sign up there at gowercrowd.com. All right, now it is my great pleasure to introduce my friend Michael Flight of Libertyfund.io. Here he is. Michael Flight, we are recording a podcast, the first of its kind. Why? Because it's on a subject about which I know almost nothing, right? Apart from the fact that you have introduced me to tokenization and to Professor Baum at Oxford, with whom I also did a podcast. It was very interesting. I learned a lot, but I really don't know much. So you're going to be educating me, and I am sure many of the listeners today. So I'm going to start off with the number one question that I have about this in the context of what I do in life. What does tokenization have to do with crowdfunding?
Well, I think it has a lot to do with crowdfunding. That's why I introduced you to Professor Baum, because it's literally crowdfunding on a global scale. And the way I got into it was a few years back. I saw all these ICOs and this crazy cryptocurrency stuff going. And I looked at, the stuff, and it's like, well, there's really nothing behind these things. There's just a few guys, and they say they got a project, and it's software. And I said, why can't you back it up with something hard, like a hard asset, like real estate? And so as we got further and further into it, we found out that there are regulated, things called security tokens. And so that's the direction that we went in. So we are a 506c D regulation crowdfunding. And the other thing is that, we're going to be launching our token through a platform that not only does the smart contract and puts it on the blockchain, but also is the investor dashboard. So it's very similar to like any crowdfunding platform that you're familiar with in the United States.
So you're building a platform, Michael?
We are not building a platform. We are using a platform called Securitize.
Oh, okay.
And Securitize is based out of San Francisco. They're probably the leaders right now in terms of securitizing assets. And they'll do not only real estate assets, but they also do VC funds and all kinds of other things. They were funded by some really big names in the industry, like Nomura Bank went really big into them. There was a few Japanese companies, some of the major U.S. banks, have gotten into their venture funding. So, there's a lot of, large financial institutions that believe that there's a future in this.
So listen, we've got to talk about what exactly is tokenization, because I'm going to say that in the first few seconds that you were speaking, used a bunch of words that have, to be candid, right? That's what I talked to Professor Baum about as well, have little or no meaning, but for which, like tokenization, I forget even the terms that you've been using, right? But for which people have a negative connotation. It's funny because people have negative connotations of crowdfunding as well. So you got to get over that barrier. And the awareness or the insight that I got from my conversation with Professor Baum at Oxford was that it's actually no different. It's a technology, is all it is. If I was to say to you, I was going to pick up my phone, but it's not really any different. If I was going to say to you, here, I'm going to send you somebody that's used to signing contracts on paper, right? That's all they've ever done is here's the paper, you sign it, you FedEx it back. If I was to say to you, I'm going to digitize that using widget script, and we're going to send it to you using bits over a fiber optic cable so that you can see it on here. And then you're going to digitally sign that using more widget bits and send it back. So no one will do anything. Forget it. If I can't scratch it, I don't trust it. That's the sense that I got about tokenization. If you use the language of the tech, people think, well, what's this? It's a bit wacky, but why is it any different actually from the digitization of a piece of paper to a DocuSign? I mean, it looks like a piece of paper on your screen and you click on it to sign, and it's all digital. It's the same kind of, isn't it just all technology?
Your description of it with Professor Baum was really spot on when you said, I don't care. I don't need to know SMTP, and I don't need to know, email language to send an email. And this is the same thing. And we keep stressing to people that we are a real estate fund. And the only thing that's different about this real estate fund from your average real estate fund is this gives you all kinds of extra options. And so there's really cool options. Number one, that there's potential liquidity. So after a 1-year lockup period, if you would do a regular syndication with us, you'd be stuck in our syndicate. And I don't want to say stuck, that's a bad word, but you would be in our syndication for 5 to 7, perhaps 10 years. With this, after a 1-year lockup period, which is mandated by the SEC, you could actually list your token on an exchange and perhaps sell your token, or you and I could get together and you say, wow, that's a really cool investment. Can I have some? And I'm like, yeah, as a matter of fact, I want to invest, part of my money in another deal. So I'll sell you half of my token. So I, give you 50, I put up $50,000 worth of tokens. If you put up $50,000 worth of money, the trade goes through automatically. And so it just gives you a lot more options.
So it's like a digital contract. It's basically all of it.
They're called digital assets. So it's basically, it's exactly the same thing. And, investors in the US can also choose not to do the token. They can just do the regular 506. They just don't get all the, bells and whistles of the token.
Token being, when you say the bells and whistles, you mean the opportunity to trade it?
The opportunity to trade it. The token also, you could invest in US dollars and then take your money out in Ethereum, which is a cryptocurrency, or you could get your monthly distributions out in a euro or in a yen. So there's just all kinds of options that you can do with the token. It really just opens up this whole new world. But the biggest thing with security tokens is it opens up the rest of the world to invest easier into the United States. Or me and you, if we wanted to invest in England, we could invest in a security token in England. And it's much, much easier because as you were pointing at your phone, you could go onto your phone and do the whole thing on your phone, and boom, you own a piece of a larger property. Name a good Bond Street in London.
All right, so let's talk about internationalization in a minute.
Okay.
Because I know that that's a big part of it. And it's very interesting as well. I want to know what you're doing in the world, because I know you're like major entities all over the world with this. But let me ask you, so I want to continue talking about the language of tokenization. And the question that I have is do you find the language of tokenization is a help or a hindrance? Do people, because I know that some people probably say, oh, yes, I'm into that. And others say, I would not touch that with the butt end of a barge pole. So tell me what your experience has been that.
I like the butt end of the barge pole. It's, I can honestly tell you that people that are older and close to my age are more open-minded about it. And I found out that people in their 30s to 40s are a little bit hesitant about it, because I think they were really scared about what happened with cryptocurrency in 2017 and 2018. And then the younger people are very familiar with it. So let's define. Blockchain is just a distributed ledger. So, and it was made famous by Bitcoin because Bitcoin figured out how to do a blockchain, and also it's immutable, so that once the transaction happens, you can't go back and change the transaction. So that's the great thing about blockchain. It provides a bunch of security. So it shows that you bought the security, and it's immutable. And by being distributed, all the rest of the ledgers in the world have to match up to that ledger. So like I say, you don't really need to worry too much about the blockchain. And this is not cryptocurrency. This is a regulated security.
Regulated by who?
It's an SEC regulated. If it's in Germany, it's BaFin. If it's all the, if it's in Singapore, it's the MAS.
Okay, so now we're definitely exposing my complete lack of knowledge about this. I'm going to ask, so the SEC, so forgive me for asking what may be blindingly obvious questions to you, but if it's regulated by the SEC, does that mean that the SEC has approved tokenization?
Yes, the SEC has approved it, because as long as you're doing it with the exemption, so the regulation CF exemption or the regulation A exemption, right. Like I said, we're doing a 506C.
So you have to so you can only sell to accredited investors.
That's correct. That's correct.
But so it's just the mechanism. I really want to think of this like, and just tell me if I'm on the wrong track, but I really do want to think of this as like a DocuSign document. If I sign a document here on my phone,
yes,
using DocuSign, I don't have anything. The only way I can evidence that I own that is I go back onto my phone and I open up, a folder somewhere that has my contract on it.
Or if you do like me, you print out everything.
You might print it out. Yeah, you might print it out. You can certainly do that.
Right, but you are absolutely correct. It's really just a technology. So it's like the internet. I mean, it's a technology for making things more efficient. It's a technology for making things more transparent. And, hopefully it'll be a technology for making things a lot easier. And the way I look at it, and I know you don't want to talk about the world, but I truly believe that, we had this, flourishing of humanity coming up into the middle class. So, millions, if not billions of people coming out of desperate poverty into the middle class. I think the next jump is going to be those people that are in the middle class now actually investing. And like I said, so you're going to get, some guy that's a farmer in the middle of Africa, and he's going to be hitting a button on his phone, and he's going to be buying, $200 to $500 worth of real estate, the US or, in Germany or something like that. You're going to get somebody in South America, or you're going to get a guy that's, on his tractor in the middle of Iowa and deciding that he's going to invest in real estate. So I think that's, it's going to, and then it's not only real estate. There was a guy in the NBA that digitized his contract. So he basically did a bond on his earnings, and, did a security token with a bond on his future earnings. And so, he got his money, in advance. They're selling artwork online. There's another company that's doing security tokens with classic cars. So you can buy a portfolio of classic cars. So there's all kinds of locked up, assets that really, haven't been available to people that are now going to be opened up. And the really cool thing about the security token is, and I've got to confirm this, but my attorney and the other attorneys that are putting our stuff together, after the 1-year lockup period, the security tokens can then be sold to people who are not accredited investors.
That's interesting. Okay, so let me
as long as it was bought by an accredited investor, the accredited investor can then sell it
to anybody. And then he can also break that up. So if he buys 50,000, he could sell.
Yeah, like let's say you were going to invest in one of our shopping centers and you put in $100,000. You would have that $100,000. And if you came to me and said, oh, I need $50,000, or I want to do some estate planning, so I want to give, 25,000 to one child and 25,000 to another child, I would say, well, that's great, but we don't have that in our documents. With the security tokens, you could do estate planning and you could give the $25,000 worth of security tokens to one child. Or, like I said, you can decide, I'm going to keep, a portion of this, I'm going to sell the rest because I need the money for, a new crowdfunding venture, however you want to do it. It, like I said, it really opens up a lot of options that investors never had before.
Right. So is that, and now my list of questions has gone from one to dozens, but is that the right to divest or to distribute your ownership? So you just described the classic structure where I invest in one of your deals for 100 grand and the documents don't allow me to divest of those or to distribute them to family, let's say, using your example. But is that an SEC restriction, or isn't that just the nature of the contract? You could set up your contracts to say, yeah, you can sell them anytime you want. Totally fine.
Right. But if you have to come back to me all the time, I really don't want you coming back to me and what am I going to do with the market for it? And then I'm
splitting hairs a little bit, but if you wrote into your contracts, you don't have to come back to me. After a year, you own these things. You can sell them to whoever you want. It's fine with me. You could do that, couldn't you, today?
Absolutely, 100%. But is it as efficient as doing it this way?
Okay.
I mean, are there, are there the outlets to, so.
I see what you're saying.
I could go peer-to-peer, and then the other thing is, so I could go peer-to-peer with you, which means, person to person or business to person, or I could list my, shares with a broker and have them sell them.
Got it.
Or list them on exchanges.
The tokens you're talking about.
The tokens. Yes.
So is each deal, so you're talking not blockchain, which is a currency. I think, again, I'm like in dark.
Blockchain is just like the internet. It's the software.
Okay. So, but now
blockchain is the software.
Oh, it's the software. Okay. And then for each deal that you do, and I've got your single-tenant net-leased deals on my page here. That's all. If you do a deal, do you create a token specifically for that deal?
It's I'm going to complicate things for you. So,
all right, wonderful.
There's certain people that have raised money for one particular property. So there's a company out of I think they're out of Florida, and it's called Realty, and they buy houses in Detroit, in Buffalo, and I think in Florida. So you can buy a piece of a house or all of a house, in one of those markets. And so, but you get that specific property. So they've tokenized that property. Ours is a fund. And the reason why we did a fund is because we wanted, as I said before, when I was talking to my crypto buddies that were actually doing these projects and I always joke around. I'm like, I went to a public school, so I don't do math. So, I don't know what an algorithm is. And then, the other thing is the only thing I know about a hash function was what, you were saying.
Something different. Exactly.
Yes. But I'm like, I don't understand what's backing this. And so then I said, well, if we bought, a property and backed it by a property, and then I backed out further, I'm like, what if you got an entire diversified portfolio of properties that were super stable? Then you'd get, quote unquote, a stable coin. And so that's what we tried to do. We tried to get geographic diversity. We tried to get industry diversity.
Okay.
And we tried to get credit diversity.
What I'm trying to get to with this, I understand that that you made the distinction between an individual property and a fund. And
Yes.
The way you described that, you answered that in real estate language. We can either buy a single property or you can buy a fund. What I'm asking though, in terms of tokenization, is that for your fund, there's a discrete number of tokens that say Michael's fund token on it. There's a discrete number, right? That's what it's not like I could trade that for a car tomorrow. The only thing it is an ownership share in your fund. So let's say you're doing $100 million fund. I don't know how big your fund is. And you've got 100 tokens, each worth $1 million each, just to make it easy for me.
Right.
So there will only ever be 100 of those tokens in that fund at any one time. You can trade those, but that's going to be a discrete number of tokens inside that. It's going to be unique. Those tokens will be unique to your fund. Is that right?
I'm having trouble with the question, but I believe yes. I believe that so we are doing a closed-end fund. Our initial raise is 30 million. We have a hard cap of 100 million. And so, but the thing that's really capping the fund is the SEC only allows 2,000 investors into the fund. So the real cap is the amount of investors. If we get 2,000 US investors, that's the cap of the fund.
Perfect. So in old speak, you would be issuing shares.
Yes.
In the fund.
Yes.
Today you're issuing shares, but those shares are represented by tokens.
That's correct.
Okay. That's all I was trying to get to, again, just to try and understand it. I mean, it doesn't, here's the thing that I get is that when people talk about tokenization and blockchain, I just start to glaze over and think, crypto does not sound good. Whatever that is, can't be good. But when you talk in terms of shares, we're just distributing. So this is where I was going to go with that. My next question was, do you still get, so if I was to invest in one of your funds, or let's say you got two funds, this fund and then a traditional one, for want of a better term, the traditional one, you're going to send me on my phone, you'll send me something that says DocuSign this.
Right.
So I digitally sign, I click yes, right, with my finger on this, and somehow it magically converts it into a secure instrument. It's a document that has trackable signatures all the way. And then I open up another app and I wire you money. You get my money, and I now have a digital representation of that contract using DocuSign.
Right.
When I use tokens instead of whatever technology is sitting behind, I've got no idea and I don't want to know. I'm just comfortable because enough people believe it works and it's secure. I'm comfortable using DocuSign. Right now, with tokens, are you going to send me a document that says DigiSign or TokiSign or something instead of DocuSign?
It's going to be almost
the same?
Exactly the same procedure that you just said. And at the end of it, you are going to also get a token. So it's going to be something that is going to be, something that, like I said, it's a digital representation of that. So
there's a contract as well,
right.
Just like when I sign a DocuSign.
Exactly. Contract. Exactly.
And then we'll have terms and conditions, and it'll be a rights and representations and
right. And it'll say for X amount of dollars, you're going to get this distribution every month. And when we
so it's the same contract as I would get in a DocuSign contract. It's just using a different technology behind it, is it?
Right. And then, like I say, the technology then gives you these extra options.
Different options.
Yes.
That is amazing.
Yeah.
Dude,
And I'm going to interrupt you, but you're the guy that, should be really comfortable with this, because this is literally just crowdfunding on steroids.
Yeah, this is why it's so, you have opened my eyes to this, Michael. Seriously, when we first talked about it, I think you sent me this article that Baum wrote.
Right.
And I thought, well, I've still got, but if a professor from Oxford is writing, I'm going to give him a call. And I just thought, wow, this is really, I was thinking of it as being something really with crypto. The word itself doesn't like resonate.
Yeah.
I started to think, but it's no different from anything else. In fact, when you talk about getting a token, you know what it makes me think of? Yeah, seriously, you know what it reminds me of? It reminds me of the 19th century signet rings.
Okay.
With red wax, right? Red wax.
Right.
We used to get, I bought this when I was a kid. I thought it was the most beautiful thing. In fact, contracts, when I was a little boy, contracts still use them. They would drip red wax.
Right.
And then they would seal the damn thing.
Right.
With the, and so that seems like, you exchange contracts, you exchange money, and then you seal it. That sounds like what the token is somehow.
For lack of a better thing, if you used to have, on the subway, or you called it the tube, the tokens that you would put into the thing, or if you used to go to Chuck E. Cheese, you would get, these tokens that you could then redeem, so that's, the token is just a representation of your asset.
Is that literally a physical token?
No, there isn't.
It's digital. The whole thing's digital.
It's complete. It's all numbers, and you get it. Oh. And there's various options of how to keep it safe. So, but the other thing that, unlike cryptocurrency, whereas if you type in the wrong number and send your cryptocurrency to someplace, it's gone forever. These are security tokens. So the company Securitize, going through the procedures, can reissue. Like, so for example, if somebody stole your tokens, or if you lost your tokens or something like that, we can reissue. We'll burn the other tokens and reissue you your tokens.
And that's because it's in a closed loop. You control the whole ecosystem.
Yes. And because a lot of people don't know what this is, but all these tech guys talk about cap tables, but it's really just, the people that own shares. And so who owns what? So, we maintain the ledger of, ownership.
Got it.
And so if there's an issue, we can then reissue it.
Yeah. How would you lose a token? Is that like losing your password?
Either losing your password, forgetting what the numbers were. There's various ways to do it.
You can,
for example, like if you lost your DocuSign documents,
just lost access to them. Like I forgot where they were.
Right.
Or how to access. I mean, I do it all the time. I bet we all do.
Right.
And that's why everything says forgot password ? Or reset password.
Right.
I've got too many bloody passwords.
But with cryptocurrency, you can't do that. So if you forget the password, if you forget the number, if you forget, where you wrote it down at, or, like I said, send it someplace, it's gone. With security tokens, it like I say, they're a different beast. They're like I say, they're regulated. They were designed to be legal. They were designed to be more user friendly. And at what they're now predicting is at the end of 2021 or 2022, security tokens will, be a much larger market than all of, cryptocurrency combined. Because if you look at it, there's $270 trillion worth of real estate. And if you just put a portion of that on,
I know. But now you're talking like a startup. Yeah, so if we only get 2% of the market, it's
I'm not saying we're going to get that.
I'm pulling your leg, Mike. I'm totally pulling your leg.
I'm saying that, if you get just a piece of that out there. Look at how much, you've just opened up all that real estate.
I am so sold on this. The second conversation I've had, thanks to you, the first with El Professori and now with you. It's like the more I learn and understand.
I'm really excited about, how it can create wealth for the average person. So that's
Tell me about internationalization, because I know that you've been to Dubai. I saw a photograph of you up there on FaceChat. So tell me about internationalization and how that is. So you've talked about distribution in Europe and in here and in there. Wow. I mean, that makes me think, gosh, I should just buy your stuff because the market is so massive. You created this massive market. Tell me about that.
Well, the real thing that, as I said before, what problems are we solving for? Number one was, liquidity. Number two, ease of access. And number three, it's tough for non-domestic investors to invest in the United States. There's, tax laws and other things that were created so that people didn't come up. They were concerned in the 80s about, the Japanese buying all of the United States and leaving nothing for Americans.
So they made take it back with them. That was the big concern. Pebble Beach Golf Club to the Japan. It's going to be in Tokyo next
Rockefeller
week.
Center. Yeah.
Right.
So, so there was all these laws. So we thought if you could open up that market and you could have, and then the other thing is like the returns in certain places, there's negative returns on German bonds right now, and they're investing in real estate, at a 2 and a 3% return. So if you could open up high quality, U.S. real estate to the world. And then the other thing is my friend, I don't know if you know him, Russ Gray from the real estate guys, but Russell brought up to me, he goes, this is like super huge because somebody that's in, certain countries that, they can't actually own real estate could actually own this.
So it begs the question.
Yeah.
If a German investor can't invest here because of international laws and tax regulations normally, why are they allowed to using a token? Isn't that circumnavigation of the laws?
No,
that's one of the big concerns. Is like a tax. Is this like a tax dodge that we're all going to go to jail for?
No. The issue is it's very difficult for a German investor to invest over here on their own. But this fund and these type of funds, or just creating a token for an individual property, will make it much easier for the individual German to come over here. So Germans do invest over here in. You've had a few of the people on your show that they've raised a lot of money from German closed-end funds. Yes. So, but so we're just making it easier for them. And then I shouldn't say the Germans, the Europeans are earlier adopters than U.S. investors in terms of being comfortable with security tokens. And so over in Switzerland, there's this whole, crypto valley, and they really, and they've actually worked out their financial regulations faster than the SEC did. So, the Europeans are interested in this type of thing.
So this is, so let's just drill down on this. And the time is absolutely flying like unbelievably fast. Obviously, we could talk more about it. I do want to kind of bottom out this question. So okay. I've had clients approach me and worked with clients who've actually set up foreign entities here in the United States, not foreign entities, but I've set up entities that are specifically designed to allow non-American citizens to invest here. There were offshore funds and Cayman Islands and all kinds of very, very complicated and extremely expensive structures to put together just because of the legal work that has to go into putting these together. But it involves tax law primarily. Mm-hmm. And how do you get money in, and then how do you get it out in the most tax efficient way? So what I'm hearing you saying is that, yeah, but now they can just buy a token. How does that not violate all of those tax laws?
Well, the one of the things that it's taken us close to a year to do this. I think, in the future, it'll be easier. So if you didn't do the international part of it, it would be, much easier. But since we're doing the international part, there was, accounting and legal expenses to set up the Cayman Islands feeder fund
Okay, fine.
and all the rest of it.
So you have done that. Okay, fine,
right.
fine. Okay.
But like I said, I think at the end of the day,
All right.
if enough people are doing it, it's going to be streamlined. The costs are going to come down. It's going to be much easier. You'll prod me to write my book on, how to do this,
Say that again. What did you say?
I said, you'll prod me to write my book.
I will prod you to write your book. Yeah. So it's funny you should say that, actually. That's a whole different topic. I'm talking to a guy tomorrow. I'm actually going to be developing an entire course. It's like up there on how to write a book, because my last 3 books have all been I've not written any of the last 3 books, actually. It's a whole different thing, even though I've written them and I'm the author, but that's a different topic. Yeah, it's a really good subject. Michael, you're onto an extremely interesting thing here. This is the second time I've heard it. Took a little bit of work, but pulling it out of you, but it sounds like nothing really very different from what we do today. It's just a different technology that allows for significant advantages in terms of liquidity, terms of ease of purchase, terms of security, a lot of things that are really very positive and accretive to real estate and real estate capital formation.
You hit the nail on the head, because when I started out, I've got younger guys, working with me, and they kept saying blockchain, blockchain, blockchain. I'm like, we are a real estate fund. Okay, we exist to provide investors with a competitive return, and we exist to provide tenants with great places to do business. That we are a real estate fund. The rest of the stuff is the mechanics of it.
It is just the mechanics. I don't want to know how a car works.
Right.
I don't care if it car works. Think of an electric vehicle, right? What's the difference? You sit in it and you drive somewhere. Who cares what's under the hood? I mean, you might, because you're eco-friendly and whatever else, et cetera, et cetera. But at the end of the day, you're sitting in a seat that looks the same. The car still smells like a new car, and it gets you from A to B. Right. So really, the only difference that I'm getting out of this, and I don't know if I've got the bandwidth mentally to really dive into it like you have. Honestly, it's a huge thing to figure it out, but it is fascinating. The only difference is the mechanics underlying it. That's really the only difference. Michael, I have to wrap up, because that thing that we just had a second ago was an alert for my next call. I'm so sorry. So we're only running out of time. I've actually got about 9 minutes before it goes again. Okay. And then we'll have about 3 minutes. But do you mind if I wrap up with 3 questions?
Not at all.
3 lightning questions that I ask all of my guests.
All right.
And by the way, this is utterly fascinating topic. You must keep me in the loop on this. It's very, very interesting to me. I want to see how your fund goes as well, and the deals behind it. Actually, I mean, that's really all that matters. It's got nothing to do with it. I mean, that's the point you just made. It's got nothing to do with crypto tokens. It's got nothing. What's the real estate? Is it any good?
Right. Exactly.
That's all it's about, right?
And I do want to talk to you a little bit later. Through my travels, I've met these guys that have a crowdfunding platform in the European Union that's fully licensed and everything, and they'd like to license it's based on blockchain technology. They'd like to license their technology with somebody here in the US that would promote it and do the rest of it. So
all right, so let's talk.
Yeah.
But first, let me ask you 3 questions. The first question, Michael Flight, what are your key personal daily habits that make you successful, get you up in the morning, make you successful?
In the morning, I get up every day. I do my devotionals. I do Christian meditation, and I do some reading and journaling, and then I always write out my goals, and I write out the key things that I need to do in order to move the rock forward. So, and then lately I've been doing 90-day planning too. So, just breaking it down in quarters, because it seems like a natural thing. Seasons go in quarters, and so the rhythm of life goes in quarters.
Planning, very nice. Second question: what's been the hardest lesson you've learned in real estate?
There's been quite a few. So
the first one that comes to mind.
Don't buy a property that has environmental problems. Don't prepay don't get ahead of paying the contractor when you're doing a renovation. There's a myriad of things. So I've been in, the business for 35 years. So, there's been a lot of problems, but, that's why, that's what makes it fun. I mean, the problems and problem solving make it fun.
That's all we are, really, isn't it? We're putting out fires all the time. It's really all it's about at the end of the day. Last question. What are your recommendations for somebody who's listening to this show today, who is interested in investing in commercial real estate through a tokenized offering? What would be your but is doubtful or hesitant? What would be your recommendation that they do to learn more?
There's beginning to be a lot more information on it. I can tell you that we have taken over the Chicago Blockchain Real Estate Collective Meetup. And so we have brought people on that have not only done tokenization, we've brought people on from Securitize, we've brought on securities attorneys. So they would learn a lot through the Chicago Blockchain Real Estate Collective, which we also have the replays on our website, libertyfund.io. And then there's other, places. Medium has some really good articles. There's a few podcasts out there. But if they really have questions, they can, reach out to me too. I'd love to. I mean, I've started calling myself a security token evangelist. So, next to real estate entrepreneur. And, I think it's the future. Digital assets are going to be the future. So, I'd love to talk to them.
Michael Flight, CEO, Liberty Real Estate, and security token evangelist. Thank you for joining me on the podcast today.
Thank you, Adam. Really appreciate your time.
That was Michael Flight at libertyfund.io. If you are a real estate professional and you want to absolutely dominate the online world in your specific niche so that you pop up in Google searches whenever investors are looking for something related to your field, put another way, if you want to dominate search engine optimization or SEO, contact me and I will help you do just that. Go to gowercrowd.com, use the contact page to reach me directly. And while you're there, subscribe to our newsletters, the Wednesday and the Saturday one. Industry updates on Wednesdays and free educational content every weekend. That's it. Thanks for listening. And thank you, Michael Flight at libertyfund.io. Always an enormous pleasure to see you, Michael. Thanks so much for being on the show today. That's all for this episode. I'll see you next time. And in the meantime, stay well. And for now, this is Dr. Adam Gower signing off.